Ladies and gentlemen, I welcome you all to the H1 FY24 post-earnings conference call of Krishna Defence and Allied Industries Limited. Today on the call from the management we have with us Mr. Ankur Shah, Managing Director, and Mr. Piyush Patel, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risks and uncertainties. Also a reminder that this call is being recorded. I would now request the management to quickly run us through the key performance highlights of the quarter, the growth plans and the visions for the coming year, post which we will open the floor for Q&A. Over to you, Ankur.
Okay, thank you, Vinayji. Good afternoon, ladies and gentlemen. And thank you for coming for the earnings update for half-yearly FY24. While some of you may already be familiar with our company, there are others who may not have had the chance to learn about us. To ensure everyone's on the same page, I'll provide a brief overview of our company. So we put up the entire presentation on the exchange and on our website also. So I'm just running through the key slides of the presentation to give you a glimpse of what we are doing. I am Ankur Shah. I'm the Managing Director of the company. I am a production engineer from Father Admiral College at Bandra, and I've been with the company since June of 2000. The company was started by my father, late Mr. Ashwin Shah. He was a double engineer himself, electrical, mechanical. We started in the year 1997 as an engineering company, manufacturing equipment for the milk and the dairy industry. And somewhere around 2006-7, we got an opportunity to work for a particular product called the Bulbar for the naval ships for the defense. And we grabbed the opportunity with both hands, and we are continuing work on the same. We have our head office based in Mumbai at Low-Parel. We have two plants. The one at Halol is where we manufacture. Halol in Gujarat is about 40 odd kilometers from Baroda. It's about 60,000 square feet odd. We manufacture equipment for and the homeland security that we're producing. And Concall is a traditional plant measuring about close to 40,000 square feet, where we are doing the traditional products. So both the factories are up and running as of now. We are very thankful to have a very good team with us, with which we can do this kind of development work per se. So our company boasts of an in-house research team. We are an NABL-approved lab also, which plays a big role in developing homegrown defense solutions that replace imported products. So we've been trying to focus on imported products that could be indigenized and used by the services, all three services per se. We have a dedicated team of over 250 people. We are proud to contribute to the nation building through our engineering skills. We have about a group comprising about 28 engineers, a few MBAs who help us strategize on the plans and also help us develop new products that we are looking to indigenize and go further. We just get on to the products that we do. One of the prime products that we do is the steel bulbars. Now, steel bulbars are basically profiles which are used as stiffeners for hull construction of warships, naval ships, and these are used for the frame members in order to support the main structure. One of the key features of the bulbar is that the strength to weight ratio is about 3 times because of its unique shape. And because of that, the strength to weight ratio being 3 times, we are able to reduce the weight of the final ship, which then translates that we can take in more ammunition, more personnel, and most importantly, reduces the weight. So it's a stealth feature. We can have better speed of the ship on that aspect. We were also given a Defense Technology Absorption Award for our development of this product by Honorable Prime Minister Shri Narendra Modi. Prior to our development, this product was being imported from. Adjoining is again special steel ballast bricks, which is used for naval critical platforms. These are used for balancing. The key feature in this particular product is the magnetic permeability of this is near zero, making it very, very difficult to detect on any radar or something. On the extreme right is a product that we've just introduced recently. These are special profiles which are used for the manufacture of the T-90 tanks by one of the ordnance factories. And prior to our development, these were all being imported from Russia. We've successfully been able to indigenize and executing an order for the same. the other two products that we can see on the screen, the welding wire and the welding electrodes, these are again complex chemistries containing special metals like nickel, titanium, nitrogen, so on and so forth. These are used for very high tensile environments, welding of plates which are used for critical platforms like the this also was a product that was being imported from Russia, which we've successfully been able to indigenize and are supplying the same as of now. On the extreme right is a product called the improved space heating device, or we call it the Bukhari. We've developed this product in joint development with DPAS, the DRDO lab, which is a Department of Institute and Physiology and Allied Science. So they develop products for high altitude, which is to be used by our army men at -20 in Ladakh, Siachen, so on and so forth. We've developed this new product in conjunction with them, where the fuel consumption is almost 1/3 of the traditional Bukhari that they were using, and most importantly, we've been able to ensure through a small solar and electric fan that there's complete combustion and there is no emission of carbon, which we all know is a poisonous gas. On the new product development, these all products that I showed earlier, these were all developed, and we have orders for the same, and we are supplying them to the different customers. And the new business plan as we move forward to this, I've said in my earlier earnings call, also we are trying to work on a particular ammunition called the super rapid gun mount, which is again used for a naval gun. This is work in progress. Things are moving, but slightly at a slower pace because still at design stage for us. The second prospect, we're very excited about this, is for the manufacture of fire resistant composite door and hatches, replacing existing steel doors and hatches in all naval ships. We've tied up with a Netherlands-based company, and we want to start to manufacture the same in collaboration with them as a joint venture. Things are moving positively on that front, and plans of replacing all the hatches due to the corrosion and the heaviness property. Composite doors are much lighter, again adding to a feature where you can reduce the weight of the ship. Third thing is we have an MOU with IIT Bombay. We are developing a product for the army for combat, which is a spherical robot. We've done the prototype, and again, it's work is to be able to for the field trial to take through. Since we were successful in developing weld consumables for the critical platforms for the Navy, we have also been approached by other wings of the defense forces for developing specialized weld consumables, which currently they are importing. The next is we've started a new company in Bangalore to work on making specialized converters, which converts radio frequency to optical fiber and optical fiber to radio frequency. In Bangalore, we've started work on the same. This is an opening up of our company's diversion fact to get the defense electronics front. And, I'm proud to say that we've bagged an order from L&T for about close to 3 crore for the supply of the same. And post this, we see good prospects for us. Last but not the least, we've tied up with another company. It's a startup based out of IIT Madras, which has developed an underwater ROV. So we've synchronized with them in order to be able to use this product for the naval application as a service job, to be able to do the hull thickness, measurement of hull thickness and cleaning of the marine growth that happens on ships once they are at sea. This helps in reducing the dry dock time and increases the time that the ship can actually be at sea. So these are the products that are in store for us in the future. I hand it over to Piyush Bhai now to discuss on the financials. Piyush Bhai, over to you.
Yeah. Good morning, ladies and gentlemen. I welcome you all for the earning updates call of the company for H1 FY24. Starting with the revenue of the company stood at 352.3 million in H1 FY24 as against 195.5 million in H1 FY23. EBITDA of the company increased to 47 million in H1 FY24 as against 32.2 million in H1 FY23, recorded a growth of 45.87%. Now, profit before tax of the company increased to 34.6 million in H1 FY24 as against 22.8 million in H1 FY23, recorded a growth of 52.21%. Profit after tax surged to 26.3 million in H1 FY24 as against 16.4 million in H1 FY23, a growth of 60.37%. PAT margins have slightly dipped by 92 basis points to 7.46% as against 8.39% in H1 FY23. Thank you. Over to you, Ankur Bhai.
Yes. So, we've covered in brief about the company and so on and so forth. And I don't want to take too much time. I want to spend more time in a session. So, Vinay, over to you. If you have had any questions already, you can let us know.
Thanks, Ankur. You can end the presentation. Anybody who wishes to ask a question may use the option of raise hand. In case the option is not available, you can put the question on chat, or you can message us on chat and we'll call you for the question. Until the question queue assembles, Ankur, one question which a lot of people... Okay, we have the first question from Pranay Gandhi. Pranay, you can unmute and ask your question.
Thanks so much. Good afternoon, Piyush and Ankur. This is the first time I'm covering your company, so I might have very basic questions, but it is just to understand the company better. Apart from the steel products, basically for the ship and the tank, you had listed down a few products, including fire-resistant door and hatches, ammunition, and radio frequency to optical fiber, for which you had mentioned you have already received a contract worth 3 crore. Could you just briefly probably help me with the addressable market size or the revenue potential for all these 3 products in the coming future?
Yes. So, it'll be difficult, for me to give you product-wise how it works. The reason why we look at I'll start with the first product, which is the composite door hatches. We understand that most of the European navies have now moved from steel doors and hatches to composite, simply because of the advantages the composite fire-resistant composite door hatches can provide them. And, the Indian Navy will also take a leaf from that. And we expect that not only for the newer ships, but even for the existing ships, that would translate to changing of the steel doors and hatches to composite door hatches. Now, the company that we are partnering with, Netherlands, is one of the world leaders for this particular product. So, we don't have to start from scratch. We just have to start to manufacture and take things forward on that aspect. This is one of the products that you said. The second product that you spoke about, the radio frequency part bit. The addressable market, as of now, we've just done a trial system for the LNT. Addressable market is only once we get in further orders as they come in. But we are excited. I don't have a clear sight of the numbers, but the numbers are very, very interesting for us to start, because we invested our time and engineering team behind it to get those products ready. That's the third product that you spoke about too.
It was ammunition.
Yes, ammunition. Again, the ammunition is currently being manufactured by an ordnance factory in India. However, the Navy is not happy with the quality and the timelines that the ordnance factory is giving. So they are almost importing most of their requirements from European countries. We are trying to fill up this gap because we've had a successful track record of delivering 3 products which were imported, which we successfully indigenized, which I shared. We've been approached to also work on this product, but this being ammunition, it involves explosives, the other fuses, which is heavy electronic part. It is in design stage for us, and we are working towards it. It'll take, ammunitions take a lot of field trial. There are lots of things coming through it, so it takes a lot of time. But at least the work we are excited to work towards it. We've started work on the design front on the same.
Thank you for that, Ankur. Ankur, just one more question. So,
Yes.
I understand that our flagship product when the company was started was dairy related products. Then, we transitioned into defense sector. So as of now, 1/5, as of FY23, 1/5 of our revenue came from dairy and the rest was from defense. And considering the fact that there's so much being invested in terms of defense, all these products coming up, what is the way forward? What kind of revenues are we looking at, or probably the ratio or the split between the two sectors?
With the tailwinds of the defense sector right now and the focus of the government on Make in India and the Atmanirbhar scheme per se, we see a lot of opportunities for us. And in fact, I listed out in my presentation because I wanted to keep it brief. We are almost doubling our capacity for the existing products that we have. And we expect to grow our revenues in the range of close to about 40 to 50% year on year as it forward. So that's the kind of volumes of the growth that we're looking at. Just to mention, we are currently sitting at an order book about close to 200 crores that is there. So we are seeing traction. We are seeing good inquiries coming in, which are getting also converted. And we see a very, very good future for us, for ourselves, and especially for the products that we've already delivered. I'm not talking on the newer products, but at least products that we've delivered and which have been successful.
And the order book that you spoke about, 200 crore, what is the timeline to fulfill that?
It's not a single order. It's breakup orders that are there, and the timeline to do them is anywhere from 12 months to 24 months.
Okay. And just one more thing in addition to that, I noticed that the EBITDA margins had dropped a bit from 16% to somewhere between 12 and 13%. Any specific reason for that? And I believe defense is usually a high margin segment because of the criticality of the products. Could you please put some light on that?
Yeah, Pranav, I would like to come in over here. It's a good question, and I'm pleased to answer your question. Can you hear me?
Yes, Piyush, I can.
Yeah. See, if you look at the EBITDA in absolute terms, so it has increased to 45.87% to 47 million from 32 to 32.2 million. See, our each and every numbers has shown a growth. Revenue increased by 80%, PAT increased by 60%, and we are sitting on the order book position of 200 crores. In our industry, normally second half it remains heavier than the first half, and majority of sales happens in the last quarter itself. Now, as a defense company, we are regularly adding new products in our basket. As mentioned by Mr. Ankur, we are adding new products every time. And due to the product mix, this happens. If you look at the figure of second half of the FY23, it was 12.76%. And our overall EBITDA remains in the range of 13 to 15%. If you look at the previous year figures, it remains in this range. So to answer your question, it's only due to product mix this has happened, because products are having different margins. So due to this has happened.
Thank you so much, Piyush. So it would be a reasonable assumption that the EBITDA margin would be in the range of 13 to 15% for the company.
Yeah, right.
Okay. And in regards to the capacity expansion, it is being doubled, right? So when can we expect the number to hit in, or are we almost done with it? And what is the amount of capital we are spending on it?
So I'll come in that one, Pranay. The capacity enhancement is work in progress right now. But, these are all very specific equipment tailored, this is not off the shelf. So it'll take us about 6 months to 7 months for us to be able to reach that capacity. We are trying to raise funds for us to be able to augment the capacity to the incoming demand. And we are talking to a few investors to take it forward.
And what would be the range of capex?
We are looking about close to 14 to 15 crore rupees is what we are looking at in terms of capex enhancement.
Okay. And Ankur, since you said that we are looking for almost a 50% growth year on year, So considering that we are doubling the capacity, it would be enough for, let's say, next 1.5 year. So it would be an ongoing capex that we are planning to do, because 50% today would result in almost 70% next year, considering the compounded growth. So.
Right. Pranay, you're great at your math. I'm from the engineering side, but not a finance guy. But I'll tell you one thing: the capacity that we are building, that should serve us for the next 3 years. The thing that we are looking for ourselves, right? So of course there might be minor capex that will come in, but this will be the major capex that we are doing right now, in keeping in mind what we see for us for the next 3 years to come.
Thank you so much, Ankur, and thank you, Piyush.
Yeah, thank you, Pranay.
Thank you. We'll take the next question from Ajay Surya. Ajay, you can unmute and ask your question.
Hi, sir. My question was regarding, so we received an order in March 2023 worth 20 crore, which was supposed to be delivered in June. So I want to know the update on that order. Is that delivered?
Yes, that has been delivered. That has been delivered.
And that product was, if you can just guide us, which product was that?
So, I'm sorry, Ajay, due to the classified nature of work, we are not able to say specifically, but it is one of the products that has been showcased. We have certain restrictions, NDAs, not to be disclosing what product is going, because of the classified nature of work. But, to mention that order has been executed in total.
But sir, if I look at the overall defense segment revenue, which is around 25 crore, and out of that only, beyond that order, only 5 crore has been added to our revenue. So what sort of revenue should we?
Interesting question. If you see the date for the order in March, we already had delivered partly in the last year itself, and only the pending supply has come within this year.
Okay, got it.
Yeah.
And sir, my next question was, sir, apart from bulb bars, sir, we also have products like ballast brick and weld consumables. So can you just guide us more on the addressable market size for those products, and who are the other players? Because in bulb bars, we are competing with Star Wires.
Right.
And for weld consumables, if you can guide us, who are the other approved vendors and what are the kind of win rates for us?
We are competing with another DPSU. There are only another one player who is in this supply of weld consumables. We are competing with them, and the win rate should be about 50% for us for whatever the requirement comes through.
So what would be the addressable market for weld consumables? And
very difficult to give that number right now. But with the growing fleet of the Navy, growing fleet of the Navy and the Navy expansion plans that are there, that is going to serve us some decent volume going forward.
So what would be our capacity in these weld consumables? Because if I look at the average realization, like for bulb bars, we have the realization around 5 to 6 lakhs per ton.
Right.
And for weld consumables, what would be the average realization and what capacity do we have currently?
Great. So weld consumables, we're not doing just one product that is there. There are multiple grades, and each grade comes at a different price depending on what the kind of chemistry is. I can give you a range. It starts somewhere in the range of about 20 lakh rupees, outgoing onwards up to 1 crore rupees a ton.
Got it.
Yeah.
So my next question is more on the financial side. Like if I look at our other expenses, that has gone up substantially in this half year. So what kind of numbers should we foresee in the future?
Usually you'll have to come in on this one.
Yeah. See, Ajay, if you look at our order book position, it's around 200 crores, right? And we are adding new products in our basket. And there are so many products which are under WIP stage, where we get the job work from outside. So there is an increase in labor and job work cost, and other consumable cost has increased. Due to this number has increased of other expenses.
Got it. And so my last question was if I look at our current order book announcement, so close to 70 crore is due on supply till May 2024. So, like, what are the developments in the company? Are we on line to achieve those targets, or can you just throw some more light on that? That would be helpful.
Yeah. So, great question. We are on track to be able to execute the orders with the timeline that have been specified. And, hence, when we spoke about the enhancements capacity that we are doing, it's not just going to be one fine day that we're going to be to produce double. We've started work on it already. And we are on track to be able to meet the targets that have been given in the purchase order for the delivery lines.
Got it. That's it.
Yeah. Thank you.
Thank you.
Thank you.
Thank you.
We'll take the next question from Dipen Vakil. Dipen, you can unmute and ask your question.
Thank you for the opportunity. So, and thank you for the very detailed presentation also. So, my first question is in the line of your new products. So, what will be the kind of a timeline that you will take to develop these new products and new segments? And once you have developed the product, what will be the timeline to get the required approvals and before we can start chasing the orders and start coming in our revenue?
Great question, Dipenji. It varies from product to product. Like the ammunition product is still going to take some time, right? It's at least a 2-year process for us to be able to get the approvals, the field trial. So that's some far-fetched away on that front. But on the composite door hatches, since we've partnered with an existing product manufacturer, our type testing should happen much faster in that case. But still, it'll still take at least a good 12 months before we can get that going and start to booking revenue. For the other products, which are the serviceable product and these are smaller type of products where the type testing should be done about close to 6 to 8 months time as we move forward. And for the electronic product, as I told you, we've already bagged an order. So we are actually executing the order right now.
Thank you for that. So all the new products will form part of the existing facility or any new plans for a new facility or anything?
No. So the current plant is capable of looking at, of course, the additional well consumables that I spoke about, which is going to go for defense aerospace. That, of course, will be done in the same facility. Part of the ammunition could be done in our factory, but we'll have to buy a few equipments for our machinery for that. But the composite door hatches, again, we'll have to set up a complete infrastructure because that's something completely different than what we are doing right now. So for some, we will need to build infrastructure once the type test and is taken care of. But for the existing products, the same facility we will do whatever capacity enhancement we'll do within the same premises.
Okay, so last question is on the lines of you mentioned that you may be raising capital in near future. So what will be your expected mode of capital raise? Will it be debt or whether it will be an equity raise?
We are exploring all the options for us, both debt and equity, for us to be able to reach what we are looking at, the fundraise. It'll be a mix of both.
Okay, got it. So thank you so much for answering my question and all the best for your new ventures.
Thank you. Thank you very much.
Thanks, Dipen. Before we move to the next participant, there's a question in the chat from PN Krishnan. Can the management provide insights on the plans of Mazgaon Docks, Cochin Shipyard, GRC, which would help the company to grow its business over the next few years?
I'm sorry, I missed the part.
Basically, the shipyard companies, Mazgaon Docks, Cochin Shipyard, and GRSE.
Right.
I mean, how is the business coming over there eventually, which is translating to your business?
So every new vessel that is being made, at either of the shipyards, be it Mazgaon Dock, be it GRSE, Goa Shipyard, Hindustan Shipyard, we get a part of the order is because one of the first things that is required to start to make the ship is you need the steel plates and the steel bulb bars. So the moment the shipyards get the order, they place the order on us through limited tender inquiry. The order, after the due process, we get our order, and that's how the supply, the entire value chain starts.
Okay. We'll take the next question from Lakshmi. Lakshmi, you can unmute and ask your questions.
Hello, sir. Firstly, congratulations on a very good set of numbers. Am I audible?
Yes, please.
Yeah, audible. please.
Yeah. So my first question was that, can you tell us about the whole approval and technological absorption process for the defense sector? Like, typically, how many years did it take you to get approvals for products like Bulbar?
Right. Interesting. Approval is one part, but before that, you have to actually make the product, right? So that's the bigger challenge, to be able to make the product as per the requirement. We started in about 2006-7 sometime, if I remember correctly, and it took us 4 years to successfully develop the product. We're not even getting on the approval stage. Post that, the approval starts. Fortunately for us, the Navy and the DRDO were helping us because they were very much needed the product to complete the indigenization loop in total, so that we could become only the 5th country in the world to be able to make a indigenous aircraft using indigenized steel. So we had a lot of support from them at that point of time. So it took us about 4 or 5 years, and the approval process is another about 12 to 24 months, depending on how fast you've got your things in place, your documentation in place.
So also, among all your product lines, which one would you say is the key driver for your business?
As we speak, it is definitely the Bulbar as we speak, but the other products in terms of well consumables, as we move forward, we see a significant growth in that market also coming through. But as we speak, it is definitely Bulbars.
Also, so given the government's elaborate plan to expand the warship fleet size, could you elaborate on the typical opportunity that you would have for Bulbars in this? Also, what would be the opportunity per ship for Bulbars for each player?
Right. So, the way the Navy has planned, or the government of India has planned for the naval expansion, we had our Prime Minister was at the Global Maritime, and he spoke about making India the 5th largest shipbuilding country in the world. And if you see the expansion that is happening at all the shipyards, be it the Mazgon Dock, the GRSE or Cochin shipyard, they're adding slip base. Slip base is where the ship is actually built. Keeping in mind that capacity, what the requirement of the Bulbar is going to be, we are doubling our capacity in order to keep up with the incoming demand, because we don't want to land up in a situation where there is requirement and we are unable to fulfill on time, as one of the questions was asked. So we are trying to build up, ramp up our capacity to be able to cater to the incoming demand that we expect.
Okay, so one last question. The working capital looks a bit stretched. So how do you plan to fund your growth from the large order book of 190 to 200 crores or that you have, considering the payment would come only post execution?
Right. So I'll just answer that bit, and if I miss out on something, Piyush, I can always add on. When we get a contract, let's say for about 10 crores, it's say supply of 200 tons of Bulbar. It's not that I will get the payment only when I supply the last kg. We do get our part payment as we supply. So if I've supplied 10% of the quantity, I will get equivalent payment on pro data base per se. As these are very complex products that are there, where the working capital cycle it takes us about 3 to 4 months to manufacture the product, because it involves various stage inspections. It is just not translated from raw material to finished product inspection, but at every stage there is inspection per se. In the last 12 to 13 years we've been supplying to the different shipyards that are there, we've never had no payment coming in or single kg rejection coming through. There are delays in payment that happen, but that happens only in the month of March, April. But otherwise we've not had any stretched payment delays that are there from the shipyards. One of the prime reasons for that is we are probably the first vendors for the shipyard. So when the project is at the start, generally it's very, very well funded. And we are not dependent on any other platform to come in before where we need to mount our product. This is going to be the base. So the work starts at this particular point.
Thank you, sir. And that was my last question. All the very best for your future.
Thank you very much.
Thank you. Thanks a lot.
Just if I can ask one question related to what Lakshmi was asking, is there a certain formula that works on the Bulbar versus the deadweight tonnage of the warship or something like that? Would you be open to talking about it, or would you not want to talk about it?
No, it isn't. This is something that is there in the public forum, so there's no hiding on that front. It depends, like from ship to ship or vessel to vessel, but it ranges in terms of tonnage. To answer it, it ranges in the range of about close to 4% to 6%.
Of the weight of the ship is what you said.
Of the dead weight of the ship, yes.
Dead weight of the ship, right. Okay. We have a question on chat from Mukul Jain. How are your receivable timelines or the credit period? Are they stable and are you receiving it on time or does it fluctuate? And if you could please guide on inventory days as well, how should we investors look at it? And are raw materials booked as soon as orders are received?
Right. So I'll answer the first part in terms of payment. There is no abruptcy in payment. We normally get our payments in time from the shipyards, per se. However, it is in this March, April time that it is slightly stretched. Generally no payments happen in April, happen in month of May because the fund that goes back to the center, so on and so forth on that front. That's the first question, if I've been able to answer on that. On the working capital, as I mentioned, the typical time process is about 3 to 4 months, which we are trying to shut down by shrink by using in more automation, so on and so forth. So we are able to reduce the working capital time where the stock lies at our place. And with better capacity utilization, we'll be able to overlap a lot of cycles that are there, which will help us reduce the stress on our working capital.
His third question was, are raw materials booked as soon as orders are received?
Yes. So we have two kinds of contracts that are there. One are short-term contracts, which have to be typically supplied in about 6 months to 12 months time. And then there are the long-term contracts which will be supplied in about 24 months or time. So for the short-term contract, the moment we get our order, we immediately book our material with our vendor. These are also specific vendors whom we can buy the material from. But in the long-term contract, there is a price variation clause built in, which is reviewed quarterly. If there is a variation beyond a certain percent, then that is given, but it also works the other way. If there is a reduction, then that also has to be passed on.
Right. We'll take the next question from Varun Agarwal. Varun, you can unmute and ask your question.
Yeah. Thank you for the opportunity and congratulations, Ankurji and team, for the wonderful performance.
Thank you. Thank you, Arunji.
The new products which we are introducing, how are the margins when compared to the existing bulb bars, what we manufacture?
Currently, since the new products are under development, except for the defense electronic front, which we've already delivered, they are under development. To talk right now about the margin might be little premature. The ballpark numbers are that we will be in good margin range, exceeding what we are doing currently. So we're trying to pick products in that range where there are margins. So we have heavier margins. We are typically trying to look at products where we can do indigenization for the products that are being currently imported, or there's a better technology available internationally. We are trying to bring that over here. So that is our play that we are looking to do.
But we will at least try to get into products which have minimum the same margin range as we are already.
Or higher, yes.
And
yes.
As we see the bulb bar business also growing,
sir,
and the new products also we are introducing. So let's say 3 years down the line, how do we, we can't predict exactly, but how do we estimate how much will be the overall revenue share from bulb bars and the other new products? Do we have any picture in mind?
We have our estimates on that because we know what way the order book for the shipyards is going to flow, which kind of gives us a sense on which way our order book will flow per se. I answered that question that we look to grow our revenues in the next 3 years at the rate of about 40 to 50%, which all the products will contribute. In some year you might have a higher on the well consumables, some year you might have a higher on the bulb bar going forward. But the growth that I'm talking about is considering our existing products per se.
And these new products will be used not just by Navy and by other defense forces also?
Yes. So for the new well consumers that we talk about that has applications with BRC or ISRO, of course, those are all developmental products, so it will move in as it moves forward. But the composite door hatches and all, they are more Navy related products per se. The SRJ lamination also is more Navy related.
So if we are selling, if we are adding a new product which is not related to Navy, so there will be a fresh approval process for that.
Not really, because we are already supplying products to the Army. We're not doing anything with the Air Force as of now. That's something that we are not doing. But with a few organizations of the Homeland Security and the Navy and the Army, we're already entered. So we have our vendor approval and registration for our company done. But for that product, will have to happen once the product is developed.
Okay. Thank you, Ankuji, and all the best for the coming quarter.
Yeah. Thank you very much.
Thank you. We'll take the next question from Daishik Mehta. Daishik, you can unmute and ask your question.
Yeah. Good afternoon, sir, and thank you for giving me this opportunity. So my question is on the two different segments that our company has, right? The dairy segment and the defense segment. And if we see the numbers, the EBITDA margin for the defense segment is slightly greater than 20%. But the same thing for dairy segment is around 7 to 8%. So that kind of puts a pressure on the overall numbers and brings down the margin profile to around 13 to 16%. So are there any plans in future to kind of demerge both these segments and just keep the defense segment going, because the margins are clearly pretty high in that business?
Right. So there should be great observation, and we are aware about this, but currently we're not thinking of any demerger as such. The dairy is being a traditional business which runs on auto mode that is there. What we are rather doing is we are trying to grow our defense business, which actually is growing. Like 4 years back, our defense to dairy contribution used to be 40-50 ratio. Now we're at almost 80-20, and probably this year onwards it will be rolling 90-10. So that's going to remain in that range per se. So we're not doing anything new on that front. It's self-sustaining. It's on auto mode, so it's continuing. But we are growing our defense business. As to the demerger bit, we have not yet thought on those lines. It's a running venture, so we don't want to intervene with that.
Okay. And the numbers that we are discussing, the 200 crore order book that we have and the 15 crore capex that we are planning. So these are purely numbers from defense perspective, right? Or does this include dairy and defense both?
The defense is like 99% of that. So because as a company, we have to show whatever the order book is there. So there's about 1.5%, 2%, I think maybe, or 1.5% for the dairy segment. So 99% is the defense in the order book that we discussed.
Okay. And if we are saying that going forward, 90% of the numbers will be coming from defense, and would that also mean that the margin profile would improve even further because the contribution from defense will keep going down?
Yes, definitely.
So is there a ballpark number that we have in our mind to have a stable margin profile?
All that I can say is it'll be better than what we have shown right now, and you've been able to identify the reason for this product mix as Piyush mentioned. So if you stick to those numbers, there will be growth in that, since once we improve our sales in terms of unit economics kicks in, and we have better prospect for margins and EBITDA numbers going up.
Okay, that's it from my side. Thank you, sir. Thanks a lot.
Thank you.
Thank you.
We'll take the follow-up questions from Ajay Surya.
So thank you for the follow-up. Sir, I was looking at the trend of warships in India. So currently India has around 470 warships. If you can just correct me on that.
No. So these include even Coast Guard vessels and so on and so forth. So active vessels about close to 120-30 odd.
And that number, so currently like bulb bar would be going into those 120-130 warships. That's what you're telling?
We are supplying material for the new shipbuilding, right? For the newer ships that will come in.
Yeah. So I was asking like if that 130 is going to get to 200 or 220 kind of numbers, so that would be our addressable market.
Yes. Yes. Plus, what's going to happen is a lot of, see, when all the ships are not, they're not going to, all of them have a timeline at the same time, right? So a lot of these ships need to be decommissioned, that is there, because a lot of them are close to their decommissioning year, that is there. So not only the differential number to reach a 200, but in order to replenish the ones that are going to get decommissioned, that also has to be considered.
Got it. Got it. Sir, my other question is on the indigenization level. So for our products which we deal in, so what sort of indigenization has already happened? Like I was looking at the hull construction, so almost 80% is indigenized content.
Yes.
But I was
Yes.
asking for other products like ballast brick or Bukhari or all those kind of products, like what is the current indigenization target and at what level currently is India at?
So the number that you're referring to, 80% on the build side, when a ship is made, they divide it into three parts. One is the build ship, then is the move, the fight. That's the ammunition that comes in. So build is, which is the hull structure, the door hatches, so on and so forth. The move is the propulsion system, so on and so forth, and then the ammunition bit. So it's easier to identify on that front. Now, in terms of Bukhari, that's a finished product that is there, right? So there is no, it's 100% indigenized. If I have to answer it, right? That product is done. It's 100% indigenized already. When we say the build is 80%, that means there are still certain components or products that are being imported, and that's why we've not reached the number of 100.
Got it. Sir, also I was referring to previous announcement by the Indian Army on that Bukhari product, like 420 crore worth of order was released in 2021. So
Right.
what was our win or how much did we contribute to that?
That is the number not released in one day that is there. That's a cumulative one that has come through over the few years. We've bagged close to about 18% of that order recently that we have got. 18 or close to 64 crore is number that we have bagged, and they had released about 120. So we bagged actually 50%, but the total 420 is what the plan is to release in the future. If you read that carefully, that's what the differential amount of saving and all that is what they're projecting. I know the article that you're talking about.
Got it. So sir, like these products Bukhari would be generally replaced after like 2 years?
Yes, so it is used 18 hours because the temperatures at those altitudes and is about minus and 20, double digits, minus 20, minus 30. So these are typically used at 18 hours a day. So the life cycle is typically about 18 to 24 months.
Got it. So my last question is on like in the current announcement we made a like acquisition on Wave Optics 25%. So what kind of like amount did we pay for that and like what that company is into? So can you just guide us more on that?
That's the electronic front that I spoke about, that we've started a new division on that front. That is there. We have formed the company, right? We have formed the company with the money that is there, and we will be investing as we move forward.
Got it, sir. All the very best for the future and wish you a very happy Diwali.
Yes, thank you very much. Wishing you happy Diwali too. Yes.
Thank you.
Thank you. We'll take the next question from Pranay Gandhi. Pranay, you can unmute, please.
Thank you so much. Thank you, Uncle. Uncle, I just had few follow-up questions. So I just wanted to know, are we targeting the export market as well, or just the Indian market for now?
Interesting question again, because these are all products, the existing products that we have are all developed with DRDO consultation, and these are classified. As we speak, we are not allowed to export them.
Okay, fair enough. And on the defense product side, I know the bulb bars are our major flagship product and contributes heavily to our revenue. Apart from this, what are the other products? Probably if you could give us a bifurcation, just rough estimates as to how much each product contributes.
Yes, I'll give it to Piyush Pai to answer that one. Piyush will probably come in on that front.
Yeah. Mr. Pranay, see, as I told you earlier also about the EBITDA, that product mix is different for the product. We are having 4 or 5 products as of now, which are contributing majorly to our revenue. And major part is played by the bulb bars. And after that, second one is the well consumables. And then comes the ballast bricks and other products.
And what would be a rough number to that in terms of just a proportion or percentage?
See, I would say that it gets changed year-on-year basis or half-yearly basis due to the product mix. As per the order book position, we supply. So this mix got changed every time.
Okay. And moving forward, talking about the 40 to 50% CAGR, so we do assume that it would be coming from bulb bars itself primarily?
Yeah, majorly it comes from the bulb bars.
Okay. And just one more question regarding the job sites that you had mentioned previously. So we do have captive production and we also have job sites. So do we have any cost advantage in terms of having our own production in-house, or it's similar kind of margins on the job sites? And what is the split between the two? How much do we manufacture in-house versus what we get it from outside?
Well, I'll just take that one. We wanted to, that we are doing the critical processes, that any product that we manufacture, there are non-critical processes involved and there are critical processes involved. Now, during the COVID time, we were trying to develop vendors in and around processes which were non-critical. Like, just to give you an example, bulb bar needs to be painted and blasted. Now, there is no technology, there is no high tech involved in that perspective. So we developed vendors instead of adding to our capacity and using our land space. We developed our vendor. So where we get the painting and the blasting done at that point of place. So that is how it works out. So these are vendors developed for us in order to ensure that within our premises, we are doing the critical applications that are there, and the non-critical applications we are able to outsource. So, we are a bit better utilization of our current infrastructure and resource.
Fair enough. Ankur, just to add on to that, since you mentioned that the criticality for the bulb bars isn't there. So how do we protect ourselves from our competitors or probably somebody else coming into the picture? Is it just that the first mover advantage that we have had since 2006, or it's something else as well in terms of permissions or a unique point for our own products?
Right. So one is the intellectual value that has we've acquired with the experience that we have gained. And when the Navy was looking to develop, I was not the only sunflower that was there. They had approached many people with large companies like Steel Authority of India Limited also, but it was not successful. And only we were able to do the initial trials. They approached many companies, and post that also many companies have tried, but they've not been able to do it successfully. You need to first be able to make the product, then you can get on the approval stage.
Makes sense. Thank you so much for giving that clarification.
Thank you. Thank you, brother. Thank you.
Thank you.
I have a few questions in chat. The first one is from Mukul Jain. The order book is won through a tender bidding process, or are we getting direct orders?
No, the order book is through a tendering process, but it is a limited tender. So, but it has to follow the tendering process. It's not direct order.
And could you please let us know currently how much tenders have you bid for which are pending?
Wow, that number is about, currently we've bidded for about another 40 to 45 crore tenders which are in pipeline.
Then there's a question from Ishan Rastogi. Can the expectation of incoming demand be derailed by a change in political climate? Is that a risk, or is there certainty that this increase in Navy spending will continue regardless of what happens in the elections next year?
Again, very interesting question. So I can speak for what we have right now, right? So I'm sure with no matter which government comes in, the orders that have been placed, that cannot be cancelled, right? And with the way India is growing and we are looking to become a good economy, a strong economy, a powerful economy, we need to be increasing our military might, keeping in mind the growth that our northeastern neighbor is doing and punching very, very hard. To add to Ajay's question, they have about 550 naval vessels and all active. We are about 120, 130. So you can do the math, and these are numbers that are publicly available, but we're not sure, how the data from our neighbor comes in. So I don't see a change of regime at the center bringing in too much change in what India's plan of military expansion is. This is my view, because we've seen it in 2011, and then we had government change in 2014. In fact, with this government, the plans have only accelerated, and once things are on accelerator, I don't see things coming back at all, because all the shipyards have done massive expansion, keeping in mind what they have in store for the next 10 to 20 years for them.
So it would be fair to assume that you're a quasi play on a war happening around the world. Since there are no further questions, we'll bring this call to an end. Would you like to give some closing comments, Ankur?
Right. So firstly, thank you all for listening to me patiently, and I hope I've been able to address all the questions that have been asked during the chat platform. And I once again thank all our shareholders, existing shareholders, if some of them are here, for showing continuous support and faith in us. One thing we can assure you as a management, we are working very hard to ensure we are growing in the right way that we are predicting, with all integrity and adding to nation building as we move forward, keeping in mind what the government support system is working for us right now. And last and all, wishing all a very, very happy Diwali and happy New Year coming forward.
Thank you, Ankur, and thanks to the management for joining us on the call, and thanks to all the participants for joining us on the call. This brings us to the end of the call. You may all log off. Thank you so much.
Yeah. Thank you very much, guys. Thank you.
All, and happy Diwali to all.